Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It is Thursday, and the some of the stocks are getting killed, especially in the Nasdaq. But the it looks pretty good with as far as the Dow is concerned. We had three major companies come through earnings today: Honeywell, McDonald's, and Honey, I can't remember. And they've done pretty well, but of course, we all probably have heard a little bit about what happened with Meta. Meta was down 25%, so not a good place to be. Kind of a mixed market, but right now it does seem that we are seeing a much better movement from the Dow rather than any of the other any of the other um, any of the others. So let's kind of take a look at the Dow really quick and kind of what's going on there. And we've got nice movement up here. It did bounce from about the 10,000 level, and it's up to the basically to the 50-day moving average. So that indeed is looking pretty good on the Dow. With with the other things, we basically had Cat did well, Honeywell, McDonald's, but the text just did not hold very well here. So it's kind of it's a tale of two cities, really. I mean, that's basically kind of the way it looks. Caterpillar was up significantly on the news, about 7%, 7.79%, looking pretty good. Unfortunately, I do not have any of these stocks. The only one I have that's close to this is Lilly, and Lilly is doing fairly well, as some of the other healthcare stocks are as well. This is a Honeywell. It was up as well, very nicely. This is kind of where the money is moving, and it's the big money is sort of moving to some of these stocks that are basically more big cap Dow stocks. This is Honeywell. It was up significantly, 8.22% as well. And here's McDonald's, also doing well. This is sort of a safety stock. You're starting to see, I think, a lot of the bigger funds that they're looking for a place to go. This is really they're looking for the place to go. Here's what I've got basically out there right now, and it's primarily it's primarily the six stocks. I did lighten up a little bit on AEHR, which is the test system company, the semiconductor test system company. It was down today, uh, about 1.2%, but it's still looking pretty good. I did take a little bit of profits there, cut that in half. Lilly was down a little bit here, but I did increase my size on that one a little bit. Here's the thing about Lilly. It's going to have earnings in 6 days. I will probably be a seller coming into earnings. Typically, as you know, if you follow the CanSlim rules like we do here on Dallas Trading Floor, what you want to do with that is you always want to, if you're not up 10% in a swing traded stock before earnings, you want to be a seller, because typically those earnings events can move against you. So be very careful here. We have a we did have a confirmed uptrend. We moved to a confirmed uptrend on Friday of last week after just a long period of downward decline. This is probably a dead cat bounce. That's sort of how I'm playing it, anyways. But I did move also into the Energy Select Spider XLE. That was up today, just slightly, not a lot. And then also I'm in the healthcare ETF, which is I'm also in the UPRO, which is the basically the S&P. It was down just slightly today, but it's still looking fairly decent. But depending on the strength of this rally, who knows what's going to happen. If you want to get a hold of our ready list, and this is the list of stocks that we've gone over and are ready potentially to move into, if we get if the uptrend continues, go over to this address: https://bit.ly/Dallas Trading Floor DTF underscore RL. So that's kind of the long and the short there. So let's get into the questions. Thanks again, everybody, for taking a look at the show today. We had on TikTok, we had over 800 people look at us yesterday. Hopefully, we can get that many today. We'd really appreciate it. But here we go with some of the comments. I appreciate it. Hey, this is very good. Any thoughts around the XLE? Well, I definitely moved into the XLE today. So let's take a look at the chart for the XLE. Of course, the XLE, the main components of the XLE are Chevron and Exxon. And I do have a full position in Exxon. I don't have one in Chevron, but that sort of is, there we go. There's the Energy Select spider. So let's take a quick gander at that. Flipping over, there we go. Okay, so this is the XLE. And we did have, it was up today just slightly, not a lot, 0.3% off a little bit after hours. It's coming up to a pivot. The pivot on this one, 93.31. And this, of course, is the buy point on it. So we're making progress towards the buy point. Relative strength 96 on this one, making this in the top 4% of the current of the market. So we definitely want to be looking in stocks that are at least in the top 5 to 10% of the market, and that's currently the case here. With the XLE, we have a very good checklist, especially for an ETF. Basically, this is a 100% checklist because it's an ETF. Of course, it doesn't have doesn't have as many things, but RS rating above 80, which is excellent. It is being accumulated by many funds, which is interesting. EPS very good, and we're less than 15% off the all-time high, which is very good. Current price above $10. That's so that we don't take penny stocks, and the number of funds that are in are more than 5. So looking pretty decent here. In terms of getting into this, I think you still could get into this here. I'm just looking at I'm going to draw a reversal line here. Yeah, we're definitely moved above the reversal line. So the trend, at least on the Energy Select Spider, is a upward trend. And that's been for the last about 1, 2, 3, 4, 5, 6, 7, 8, 9, about 9 days. So I do expect, though, that we're going to get a little bit of a correction. Typically, a stock will not go up more than about 8 or 9 days in a row. So consider that, but you might be able to get in there with a with a nice buy on this tomorrow, because I do think it's going to pull back a little bit tomorrow. That's my guess, and so possibly we could do a buy in about the 85 range. I think that would be pretty good for the Energy Select Spider. So this is a good way to play the energy sector. This has been the only sector of the market that's been up this year. Has been the energy sector, and of course, this basically takes the entire sector. You can buy the entire sector this way with the ETF. You don't have to choose a stock, which is very, very good, because a lot of times that's where you get into some of the difficulties. All right, let's take a question from TikTok. Thank you so much for holding out here. ETH low prediction. Interesting. What do you think about Meta comeback? I think that the days of Meta. This is the thing about the market. You got to be, this is the thing about the market. Let's just take a look at Meta. I mean, I do think that this. I was looking at, and I have my short list of stocks to short. I was, again, I probably should have shorted this one because all the signs were there. I mean, there's some other signs as well that this probably will not recover. By the way, what people don't realize is that back in 2000, I was a holder of Microsoft, and it literally took 18 years to get back to where it had been in 2000. So even the very best companies a lot of times don't come back. So just a lot of selling going on here. If we look at it let's just look at on a monthly basis. This is going to be kind of from when it was created. Basically back in 2012 is when Meta came out of the box. It was called Facebook back then, of course, and it came out of the box, at about 18, went up, and then really hit its peak, and that was really at the end of 2020, really in the November timeframe, and that's really kind of when the market, especially for the growth stocks, started to wane. Now, we're in a period of time with rising interest rates that you're going to see growth stocks do very poorly because, of course, they depend on very, very low interest rates. Right now, the best inflation hedge is oil and oil stocks because that is used by everybody. And even though people don't like to admit it, oil and gas run the economy of the world, and everybody needs it. And they will forego a lot of other stuff like Facebook to buy gasoline. So that's one thing we all have to look at. So the inflation protection, at least for current times, is probably going to be in some of the oil and gas stocks. And currently, I have a full position in Exxon, and it's a very boring stock, but it has a very low price to earnings ratio, which makes it good. I also sold a call against it, so I'm doing fairly well in that stock. But if you look at Meta, we went through earnings here. Sales are off 4%, but this is the key. Their profits were down 49%. So basically, they're going to have a massive problem in the next quarter. We're probably going to see lots and lots of job losses there. So I don't think we want to be buying. We don't want to be catching a falling knife, and that's kind of what, unfortunately, we have with Meta. So not a really good thing. Not a really cool thing. Charles, thanks again. Tell us about RJF. What's your ready list? What on your ready list looks interesting? Okay, thank you very much for that. Let's kind of review the ready list that we can kind of take a look at, and I'm just going to shift on over here to the ready list that we have. And by the way, you can get a copy of this by going and just downloading it. If you go to the website www.DallasTradingFloor, you can definitely get that ready list. So let's take a look at this ready list. That's the watch list. Let's go look at the ready list here. All right. This has some names that you probably heard of before. Of course, AutoZone is in there. Let's see that one. Now, the issue with a lot of these stocks that I'm going to show you, some of them are fairly highly priced. So AutoZone is looking fairly good here. Let's see if we go. Let's kind of go down the list. I'm going to go to the dailies here. Okay, this is Cord Energy, CFE. Yeah, ConocoPhillips. Here's one that I did buy that I think you might want to look at. And this was on the ready list. This is British Petroleum, BP. You've probably heard of it. I did buy a full position in that today, as I do think that they are going to benefit tremendously. Let's take a look at that one really quickly. Oh, goodness. Let's look at that. British Petroleum is the one we're looking at here. Oh, okay. Well, I don't know why it did that, but it did that. There we go. British Petroleum. There we go. So here's BP. Let's go look at where they're at. See if that's coming up on the screen here. Let's see if I can get that one up. Let's see if we have BP up there. Yeah, BP, great. Okay, so this is BP, and it did just move above the buy point. That's critical. That's part of the reasons I did buy it here. It broke out. The buy point was 32.88, coming out of a cup and handle formation, which of course is a great formation, one of the best. And as you can see, there's a blue dot here. What that means, of course, is that this was the highest amount of volume to the upside since the beginning of this formation. So what that's telling us is institutional money is sort of coming in to some of these really safe, big oil giants like BP. Now, the price of this, of course, it was up today. It was up today significantly, 2.85%, and essentially a general down day. It's off a little bit after ours at 33.11. It's still buyable here, by the way. And let's look at the checklist to check it, just to make sure. And here we go. We have an 89% checklist. The only thing it's failing on, of course, is the EPS rating. And I want to take a look at some of the fundamentals here, so we can kind of look at those as well. Come on over here too. Yeah, there we go. Okay, so this is the fundamental analysis on this one. Tremendous last quarter. Sales were up 85%. The profits on BP up 214% quarter over year. So that's looking very, very good. We have 286 funds that are major funds that are in it, and that only includes 2%, believe it or not. So this is the reason people are buying oil stocks and not Meta and stuff like that. The PE ratio on BP is 5. That means that it's a $30 stock and the cash flow is $1.37. So that is tremendous. Right now, people are looking not so much at stocks that are, that may have future value, like some of the tech stocks, but the stocks that are paying us right now. And that's definitely the case with BP. Um, their profits this year should be up 116%. So it's looking pretty good. This is still actionable. And basically, we have another one that I really like in this group is called Marathon Oil, MRO. Part of the reason I like MRO so much is because we are facing in this country, unfortunately, we are facing a shortage of diesel fuel. And that's part of the reason that many goods are so expensive is because of the high price of diesel fuel. Diesel fuel is only refined. There's a shortage of diesel fuel, and there's a shortage of refiners to refine it. And Marathon Oil is one of the major diesel fuel refiners. So very interesting there as well. So that's one you might want to look at as well. MRO. All right. When you're calling, what is your ceiling on XOM, ExxonMobil? Hope it stays high. Me too. Me too. Well, here's what I did. I think that we could see Exxon Mobil at about. I think we could see it as high as 115, but I am not taking any chances here. What I did is I'm sort of locking in my profits on ExxonMobil. I know it's kind of the boring stock, but this one has done very well. I haven't held it all that long, but we have some nice movement on it. This moved. This is one of the reasons why I think BP is. You ought to look at this because BP just moved above the pivot. We moved above the pivot with Exxon just a few days ago. Now I was buying it below the pivot when it moved over 100, and as you can see, it's moved up very, very nicely. I suspect we're going to see probably next week. We're probably going to see this in the 110 range. It's pretty close. It's up after hours 108.25. So that's looking fairly good. And we've got some strong accumulation by some of the funds in here, so that's looking good as well. So let's take a look, kind of see if I can if I can give you a better give you a better look see on that one. This is well, we've got to change it out from BP to Exxon Mobil. So let's see if we can do that. Did I do that right? No. Okay, so what I'm going to do here is I'm going to change the screen over to Exxon from BP, and hopefully we can see that. Just a second. Okay, there we go. All right, so is this BP? No, this is Exxon. Good. All right, this is what I want to see. So here's Exxon Mobil as well. Let's look at a few of the aspects of Exxon here. Let's look first of all at. No, it's not letting me do that. There we go. Let's go over here to the weekly chart. There we go. And for some reason I can't. Yeah, weekly chart. Okay, so let's go over here and see if we can see some more of the. I don't know what's not letting me do that. But anyways, the checklist. The checklist I know this one is pretty darn good. For some reason I can't get it up. Now here's the issue with Exxon. We are going to have earnings in one day, so I would not buy it tomorrow. I would wait until next week to see how it comes through earnings. I suspect it's going to come through earnings well, but you don't want to be buying into earnings. You want to wait for earnings and then buy it after earnings. So the first day that really we can buy this issue is going to be on Monday, I believe, and I do think they'll have strong earnings. That's my guess, based on kind of what's happening with them. So I think definitely hold it into it. Now here's the thing: if you're not up 10% on this one, with you could probably do 8% with Exxon because it's relatively stable. I would consider cutting my position coming into earnings just because we could get an earnings surprise. I don't think we're going to get it. I think Exxon's earnings is likely to be stellar because, well, it's Exxon, and they're just going to do very, very well in this kind of environment. So, definitely think it's going higher, at least for right now. So that's kind of where we're at. All right, Ramesh, thank you. Ampex, AMPX, is that right? I haven't seen that. I haven't seen that symbol ever. Let's take a look for Ramesh. AMPH, that's interesting. AMPH, is that right? I'm sorry. Am no, Ampress Technology. Well, here's the thing about that. I probably would not trade this issue just because it is too small and too volatile. Now, you can definitely make money in penny stocks, but especially in this market, I am not a fan of them, and I think you got to be careful here with a stock like this. So, basically, what we're looking at here, this is well, it isn't really a penny stock, but yeah, it's $11.14. I think you just got to stay away from a stock like this. It's a new issue unless you have some real good information here. Yeah, lithium ion batteries, 100% higher energy density. Well, that's true, but there's a lot of people in that business, so I'd be very careful here. I probably would not be a buyer of this stock. Okay, let's go to Go Video. Thank you. VRTX down today. I know. And I put it up on the ready list and everything. Unfortunately, well, at least for me, I didn't buy it. I didn't buy it. I'm kind of glad I didn't. Again, this market is a tough market to trade. Just things are setting up, and then there's no follow through. So you just right now there's a flight to safety for most of these companies, and that's just kind of that's kind of long and the short of it. Here's VRTX. Let's see if I can pump that up. Yep, Vertex Pharma. There we go. All right, yeah, it just killed. It just killed here. This is why, by the way, everybody, and I want to show you this. This is why if you don't have a 10% cushion going into earnings, you should always sell because this came into earnings doing great. Everything's looking good. Boom. It comes with earnings, and the earnings per shares were up, and guess what? It fell. It fell almost, almost 8% just on the earnings. So, here's my advice to you: when you are buying these kind of stocks, especially in this environment, is that coming into earnings, find out when the earnings are. If you buy the stock on uptrend, buy it on the uptrend, but sell it unless you have a 10% cushion coming into earnings. So that's kind of my 2 cents there. And this is what I always do. This is why I'm going to be selling Lilly. Let's take a look at this one. I have a fairly large position right now in Lilly, and it is it's done pretty well. Let's look at that and see if I'm going to show that. There we go. Is this Lilly? Yeah, it is. All right. So fairly good position in Lilly. It's up after hours just slightly. I mean, 7 cents. That's nothing to 357, but it's still holding above the buy point 335. Now, this is extended. This stock is extended, so I wouldn't recommend buying this one. And also, we have earnings in 6 days. I most likely will be selling this in 5 days. I will be selling this. And again, I came in right, from the pivot, basically as it pulled back to the 21-day line and then moved above the pivot. That's where I was in. So this is really just a swing trade, but this is kind of what's happening. There's movement into some of the big stocks that are profitable, like Lilly, but you just got to be careful. Just don't hold these through earnings right now. It's just not the time to do it. Really, it's not any time to do it, but that is a major thing that you've got to be careful with to not do. All right, XLE charts. Oh, is not shared. I'm sorry about that, Go Video. Sorry about that. Let's share out that chart. And sometimes sometimes it doesn't. I don't get it right here. I don't share the screen properly. Let's see if this is. Um, let's go to XLE. There we go. Of course, this is the Energy Select Spider. This is mostly made up of two stocks. That's Chevron and Exxon. So, okay, here we go. This should be the XLE. Yeah, there we go. All right. So this is Energy Select Spider. So let's take a look at this one again. We're coming up to a buy point on this one at 93.31. Remember, this is so basically what happens is, as you probably know, stocks will come up to a high point like the buy point 93, then they will base and they'll come down and they will form a consolidation. And that's exactly what's happened here with the XLE. And it oscillates. It comes down to typically to the floor, and then it moves up and then to the floor and then up. And then, so my guess is it will move up probably very close to 93.31. This is probably a good place to sell it, would be right as it moves up there, because it's going to have difficulty moving higher than 93. So that's kind of always the thing. When you find a high point like this and it forms a consolidation, then it will come down and it'll sort of bounce and then move back up. So that's kind of what is happening on the XLE. I suspect that we are going to see a little bit of, hopefully a little bit more juice on this one for about the next week. But after that, I'm probably a seller in this one as well. So just not as much momentum as we've had in the market. All right, let's look at CELH, and let's look at this one. CELH. I do not have this one, but this is Celsius Holdings, and what this one is, of course, is an energy drink company. Funny because sometimes energy drink companies, they're each cycle seems to have a company. Monster Beverage was the last one. Each cycle seems to have a drink company that makes money. I don't know why this is, but it is. In the last major move up, it was Monster Beverage, and this one sort of is the one for right now. All right, let's take a look at Celsius Beverage. Here's the thing. This is what they call basing. It came all the way up to a high of 118. And of course, you see, this is why I move my stops up. You can see here, I was trading this one on 825. I was stopped out at 112.43. And of course, it made the high at 118. I have not been back in it since because it's told us not to be in it. See, that was my buy there, and that was my stop out there. So my guess is that you don't want to hold this one for a while because it's forming a base, and it's not completed that base pattern yet. So not necessarily something you want um, to be holding. So here's the thing with Celsius. I think you just gotta find some better merchandise right now. All right, Sarah, thank you very, very much for this question on Shockwave, because this one's definitely been on everybody's list. And I was not in this one either. I'm glad I wasn't. Um, so on Shockwave, and I do think eventually this is going to be tremendous. But here's the issue with its forming patterns. You know what I was saying? How it comes up to that buy point, and then it'll form a consolidation. So it came all the way up here. It got resistance. It pulled back, formed the bottom of the consolidation, and then it's come back up. And immediately when it hit that that buy point, boom, that was it. It pulled it way down. So not the greatest thing, not the greatest thing there that's happening on this one. Right now, you just got to wait for this to form a consolidation and reverse course. Unfortunately, Shockwave, this is not viable at this point, and that's kind of sad. Let's reactivate the trend line here. What this does, of course, is this shows us what the general direction of the trend of the price is. Currently, uh, currently Shockwave is in an uptrend, but it just pulled to a downtrend. See, this is why you drive this line up there. You don't buy it until it moves from the downtrend to the uptrend. You buy on the uptrend, and then you push your stop loss in. And if you get a pullback like this, you'll be stopped out making some money. But if you don't, it'll just come right back down, and it'll follow the trend. It tried to make an upward movement here. See, there's a lot of buying that came in here. This is the volume, but there was just too much for it, and it pulled back. So currently you don't want to buy Shockwave. It's in a downward trend, and that's just unfortunate, but it is. So not the greatest thing here. All right, I'm going through a lot of stuff today. Let's look at Apple. That's a great one, Mr. Jeet. Thank you very much. Apple and Amazon. Let's look at both, but let's look at Apple first. Let's look at Apple first. Again, the interest rates are wreaking havoc on the tech stocks because they're so dependent on low interest rates. That's not what we are at in the market right now. We have, unfortunately, high interest rates, and they're not favoring some of these stocks. We were coming down, reversing very nicely. We came right up to the 50-day line, and then that killed it. And unfortunately, the trend right now in Apple is down, so you just can't really do anything. They're through earnings. They had some nice earnings that came in there, but but the street wanted more, so you can't really buy any of the FANG stocks right now. Apple, Netflix, Amazon, are just not performing well. Microsoft, same problem, just not doing well. So you got to really kind of stay out of that patch. The parts of the market that seem to continue to be doing well, of course, are the oil and gas and some of the large pharma healthcare issues. That seems to be where the action is in the market. There's a little bit of interest in some of the semiconductor stocks, but it's pretty spare there too. So really, where we want to be looking for the next leaders are still in oil and gas and in pharma. That seems to be the place. So not exactly exciting. DV, this is Double Verify. This is a tech stock, and let's look at DV and see what's going on there. And if we can look at it. Somebody was trying to call me, so not anymore. Yeah, here we go. Moved up very nicely. This is an upward trend, I have to say. I don't know. I don't see a place to buy this one right now. I mean, it did move above. 30 seems to be resistance. Let's go over here to the 10-minute chart to see if there are any clues here. Yeah, there's a lot of selling going here. I would probably not be in this one either, unfortunately. All right, let's take the last one, and that's going to, of course, be Amazon. And Amazon again, one of the FANG stocks having trouble being, it's just AMZ and just not. There's going to be some layoffs going on at Amazon. Looks like they did kind of overhire on some of their Amazon stuff. Amazon Prime isn't selling as well. And we're in a downward trend for Amazon, at least for right now. So not a good place to be. Typically don't want to be buying any stock below that black line there. That's called the 200-day moving average. We don't want to do that because that shows decline in the issue. So right now, after everything, we're off. It's $98 in the after-hour trading for Amazon. So I can't recommend it at this point. I just don't think it's looking very, very good. Let's look at the monthly chart. You can see if we go all the way back, this is kind of the Wayback Machine here, to 1987 when Amazon was formed. It came up and then it's been on this steady climb all the way until very, very recently. And if you look, several times in its life, it's hit this 50-week moving average. This is on the monthly chart, and when it's hit it, it's bounced up. Okay, there. But look at what happened this time. It did bounce up, but now it's getting resistance. So unfortunately, right now is a downward trend overall on Amazon, and I think it's probably going to go lower. Let's look over the weekly chart just to kind of check my theory here. Yeah, this is in a downward trend. There we go. It's a downward trend. Ouch. It is looking. I don't know if you could short Amazon here, but it is sort of looking more like that. It's looking like it's probably going to go lower. My guess is before this recession is over with, we're going to see Amazon probably selling at about 85. Okay, that's my guess based on this chart. So I just don't think you can go into Amazon at this level. And it's just it's just one of those things. Let's look at the fundamentals here and check. 7% up in the sales. That's looking good. Lots and lots of sponsorship in funds. 6,517 funds in Amazon. It's amazing. Their PE ratio, and this is the problem here, everybody. Even though it's Amazon, you think, wow, it can't be stopped. The PE of Amazon is 100 right now. 100. Remember when I showed you BP? Let's look at BP. The price to earnings ratio on BP is 5. Everybody, 5. Okay, so this is 20 times right now. British Petroleum is 20 times as profitable in this quarter than Amazon is. So that's why this is where you want to be. And I did buy a position in Amazon this week because this is showing extreme strength. So it's a very boring stock, but hey, it's where the earnings are right now in a high interest rate environment like we're in. The benefits are going to the companies that can show strong earnings, and that's not the case, unfortunately, with Amazon right now. Amazon's price to earnings ratio 100, BP's is 5. Now, normally I don't rate stocks that way, but in a high interest rate environment, everything changes. It's all about the earnings, and right now the earnings are with the oil stocks. So take a look at BP, take a look at Exxon, take a look at Chevron. These stocks are set up very well in this environment. Okay, thank you, everybody. Thanks so much for taking time and looking at the show. This is probably the last one. Oh, TMUS. I think that's T-Mobile, right? Yeah, so let's look at T-Mobile. TMUS. Yeah, TMUS is T-Mobile US. Let's look at that. Not a bad form here. It's double bottom. That's nice. That's a nice, and it does look like, double bottoms are a good formation. Let's look at the daily chart, see what's happening there. Yeah, we're right up at the buy point. The question is this actionable? I do like this chart, but I am a little bit leery of this market. I tell you, I would put this on the watch list. I would not be a buyer here. I think you're better off in the oils or in the pharmas, the big pharmas, not just the little pharmas. I'm talking, like the McKessons and Lilly and those kind of companies. All right. Well, thank you very much. As always, if you could like the show, I'd really appreciate that. Of course, that helps us out a tremendous amount here. So if you can smash that like button, everybody tells you to do that, I know. But if you could do it, it is a great thing. So hit that like button, smash that like button. And we'll be back tomorrow. Of course, it'll be Friday, so we'll do a Friday roundup. But smash the like button and do subscribe to us on www. Dallas Trading Floor. And I will be back tomorrow at 5. Thanks, everybody. Happy trading, and I hope, I hope everything's going well. You want to kind of trim your exposure right now. We may be pulling back again. So be careful on the exposure, but take a look at some of the stocks on the red list, but also kind of zoom in on the stocks that are in the oil and gas area. So I will be back tomorrow at 5. Happy trading.